So this is the pound dollar analysis for Thursday the 19th of October. Now, let's have a look what's happened with these markets. From the analysis yesterday, I was saying that I did expect some continued weakness in the pound, a possible rejection from 200 period moving average, which we have had down to this major level of support at 31.47. Now we have come down to 31.47 and we found support as we have over here on the left on the 12th of October, and we are back up again testing this 200 period moving average. Now adding to the the confluence, we've got the 250 period moving average pretty much in the same place. Currently the 50, let's just have a look where we are. So at present the 50 period moving average is at 32.03 and the 200 period moving average at 32.08. So they are pretty close to one another, and the fact that the two moving averages are pretty close to one another, we might see a bit of a pullback in the pound US dollar. Might even go all the way back down to retest the major support at 31.47 before a continuation to the upside. A successful navigation of these two moving averages here, we'll be definitely looking at the 400 period moving average currently sitting at 32.59, just to see if we do get a reaction to it, because we have had several rejections off it, as can be seen over here on the left of the chart. If you look here on the left, the 400 period moving average here is in black, and as you can see, with this sloping trend downwards, with the price being going down before it broke down to retest major support underneath at 31.47, we did have quite a few rejections off the 400 period moving average. So the market participants are respecting it so far. So if we do break to the upside, we'll be looking for another test of the 400 period moving average, above which we'll be looking at 32.81. We've got minor support, which is weekly pivot at 33.04. We might not see much of a reaction there, above which we'll be looking at 33.50. Now, if we do break down and retest 31.47, the thing is about support and resistance. If they are tested pretty often over a short period of time, they usually break, as whether it's buyers or sellers in the market, they pretty much become exhausted and they step out of the way, and either the bulls or the bears take control of the market and pretty much drive it in the direction from which it is being tested and broken. So if we do come down to 31.47 and we do break, either from a consolidation and brief move upwards, then a break downwards, or we just simply momentum takes us all the way through, we're looking at 30.93. Below that was the previous week's pivot, and below that we'll definitely be looking at 130, the big round number, for possible support of prices. Now, I have had a look at the upside targets and the downside targets, so I'm just going to have a look at the higher time frames to see if we have more clues as to where prices could potentially go. So I'm going to have a look at the monthly first. Let's get scaled on here correct. Now, on the monthly chart, we were pretty much trending upwards after findings after this consolidation underneath. There's this consolidation down there. We did seem to break up to the upside. We had an engulfing candle being put in September, but we sold off near the end of the month, and the selling has continued into October. Now, at points in this month, we have seemed to have found a bid, but we're still bearish on the month, which is not a good sign going forward. After seeing what would have been a bullish engulfing candle, we would have liked to have seen prices continue the upward momentum, but it seems like near the end of the month of September and into October, the bears have had more of a say than the bulls. So let's just have a look at the weekly time frame. So on the weekly time frame, we can see here we've had a series of higher lows. More recently, we've had prices being supported by the 20 period moving average is acted as dynamic support for prices, but currently this week we are trading in bearish territory. I did expect follow through after last week's candle had a strong close not at the highs, but pretty close to it. I did expect continuation to the upside to possibly test 36.57. But the fact that we are trading in bearish territory at the moment would suggest that the move from last week possibly was just an impulsive move off the 20 period moving average, and it was just a case of a counter move after the exhaustion of the candle which opened on the 2nd, which was pretty sizable after 2 consecutive weeks of selling. So it was an exhaustion into support of the 20 period moving average before the bears stepped out of the way and bulls regained a little bit of control. But the bears seem to be back in the market, even though we are still in an uptrend, as can be seen by the slope of the 20 period moving average. So if I have a look at the daily chart, and again, what we can see on the daily chart is here we've pushed up to 36.57, and we have found support as 400 period moving average. Here we had 5 consecutive days of buying. The first sign of possible weakness did come in on the, when was that? Was it 13th? Was it? No, it was on the 12th, when we had this candle push all the way down before being bought back up and closing bullish. We did have after which we did have this pin bar form, which is a bullish pin bar. But with the rejection of the 20 period moving average, again another sign that there was potential weakness in the market, after which was followed by these 2 bearish candles closing near their lows. Now we have seemed to have found quite a bit of a bid, and we've put in a bullish candle on the 18th of 31.47. So if this was to not be considered a lower high, this most recent selling that we've seen in and around the 32.81, we would have to see a continuation from this support of 31.47 all the way back up to 32.81. But what we would ideally like to see is a move beyond that and a break of the most recent highs, being at 33.38 for a continued move all the way up to 34.29, and above that we'll definitely be looking at a major level of 36.57. But if we do in fact break down again, we'll be looking at the 31.30 to the downside being a medium term target. We'll also have to pay attention to this 400 period moving average currently sitting at 30.28, as we may find support as we have in the past over here. It did provide a bit of a resistance over here as well, and we did break above it, but we did sell off from it over here in August. So that should wrap up the pound dollar analysis for October the 19th. So before I go, LCS, like, comment, subscribe. Thanks for watching.